Do this to stop your money from losing value. Hello, everyone, and welcome back to another episode at Novarise Invest, your channel for financial education. So today it's going to be all about preserving your money, preserving your capital with everything that's going on with inflation, with money printing, with another war going on, and with the lack of supplies. It's only a matter of time that your dollar, your money that you worked so hard for, begins losing value. But it doesn't have to be that way. There are things that you can do in order to preserve the value of that money and possibly even increase it. And that's what we're going to cover today. And towards the end, you're going to be given different choices when it comes to actions that you can implement. And according to your comfort zone, you're going to get to pick the one that works best for you. So let's get started. Before we start, let me remind you to subscribe to this channel and hit the notifications button. All right, so before moving on to the options or things that you can implement, I wanted to do a quick exercise to truly show you with numbers how everything changes depending on the financial or economical climate. What happens truly to your money? So let's assume that on a monthly basis, you make $4,000, right? Now, that $4,000 is pretty straightforward. It's what you see. It's what the numbers are showing. So in your eyes, based on what you see in front of you, you're making $4,000. But things are actually not what you see. Not everything you see is accurate because this number is not adjusted for inflation. And in order for you to get the real value of something, you have to adjust it to inflation. And inflation today is currently at 8.5%. So we're recording this episode towards the end of April. And based on the numbers that you see here on the screen, the latest numbers that we have for inflation is March. And according to this, inflation is at 8.5% today. Okay, so back to this. That means that whenever you're looking at certain number, in order for you to get the real value, you have to adjust that number to inflation, which it will translate into a smaller number because inflation destroys money. Inflation destroys your purchasing power, which only translates to you having less money to spend. And when you adjust this to the inflation rate of 8.5, you're left with $3,660 for yourself, right? So that's one step. Now, we all have bills. We all have financial responsibilities that we need to take care of. So let's say, for example, that your monthly expenses look like the following, right? So hypothetically, you have rent at $1,500. You have to pay your cell phone, your phone bill, right? We have $70 over here. You also have to pay for gas because you got to drive, right? So $450. Then you have to eat. So there you go for groceries. Let's say $300. Why not? And, nowadays we all need the internet. Otherwise, how would you be turning it into a channel, right? So we have internet at $80. So when you add all of this up, that means that your monthly expenses are at $2,400. And when you deduct that from whatever you really get at the end of the month, that means you're only left with $1,260 to spend. Call it on a trip, call it on parties, I don't know, get together with friends and, yada, yada. So that's assuming the expenses are staying at a normal level. But I'm sure you've seen so far in the news that things are not staying where they are. Things are not what they used to be because food prices are also going up. And so everything around it's going up, not just food. But I wanted to show you this article just to, quickly depict to you the reality of things. It's not something that I'm just making up because I want to be dramatic. These are facts, right? So beef and veal has gone up by 16.2%. We have pork up by 14%. Poultry up by 12.5%. Fish and seafood, we're talking about a 10.4%. Eggs, 11.4%. dairy 5.2, and the list goes on, right? We're going to be here all day if I went through each line one by one. So that means that this list that you see here also needs to be adjusted for inflation, because prices have already gone up or there are in the process of going up. So it would be only fair to adjust these expenses to reflect something that it's more accurate and representative of today's state. So when we adjust it to a rate of inflation of 8.5, we have that in rent, you will be paying $1,627. That will be the real rate. Then you have your cell phone or your telephone. We're talking about a new rate of $7,595. Then you got gas, and we're talking about $488.25. And then groceries going up to $325.50. And then we got the internet or cable, depending on what you use, $86.80. So now these new expenses are now totaling $2,604. And when you minus that to your current salary of $36.60, you're wind up with even less money now, $1,056. So compare this number right here versus this number right here. Things have changed, huh? That means you have less and less money to spend. Sadly, that is the reality, but things don't need to be that way. You don't have to just sit there and take it. There's something you can do to actually preserve the value of the money, if not even increase it. And that is just by investing. I know, easier said than done. So what's the trick here, or what are the things that you should be looking into? Because not everything is an investment, even though it seems that everywhere you look, they portray it to be that way. But before we do that, if you're enjoying this episode, do not forget to hit the like button right here so you can help this episode rank and help others like you looking for information of this kind. So a simple rule of thumb that I have is that whenever you're investing in a particular asset, that has to give you a return of at least, okay, so I gotta emphasize it here, of at least equal to or higher than the inflation rate, which is currently at 8.5% today. Okay, so I took on the task of looking into different investment vehicles that could meet that criteria, meaning that it could give you a return of at least equal or higher than the inflation rate. And by return, I mean a return of your investment, right? If you invest that money, how much do you expect to see your money grow? And that growth has to be at least equal to 8.5 or above 8.5. And this was the list that I was able to come up with. So I got precious metals, particularly gold. Then there's also the stock market. And of course, because I'm biased, this is a real estate channel. We also have real estate, but I'm not being biased just because I want to be biased. I actually did the research and found data that justifies what I wanted to show you. So what I decided to do is that I went into the historical records because I wanted to really see if there was some type of consistency over the last couple of years, because this whole mess with the inflation and the dollar printing and the stimulus of money and everything, it all started from late 2019. So we got 2019, 2020, 2021, and year to date 2022, right? Because 2022 isn't over yet. So based on what I saw, these are the historical returns over the past couple of years. So I have this article right here that shows the historical return of gold prices. And you can see the numbers right here from 2019, 2021, and 22. So for 2019, we have 18.83%. For 2020, we have 24.43%. For 2021, it was a bit on a negative side, so we got minus 3.51%. And so far, year to date, for 2022, we got 5.78. Okay, so now let's look into the stock market. What do we have over here? So here's a whole list from this article, and we have 2019 numbers to be sitting at 31.21%. We have 2020 numbers to be sitting at 18.02%. And we have 2021 at 28.47%. And the forecast for 2022 on the S&P, we're talking about expected growth of 9%. Okay, now moving on to real estate. In 2019, the return in real estate was 8.6%, according to this article. Then in 2020, we were talking about an average of 11.6%. Then on 21, we are talking about an average increase of 18.8%. And for 2022, the projection shows that home prices will be jumping 11%. So here you have it. Here's your table to do a comparison. Now, I want to highlight this number right here because I know a lot of people might be seeing, hey, well, why did you include gold? Because it shows that there's a negative right there, right? But gold is actually volatile. So the way I decided to approach this is by taking an average of all the years, because if you're investing, the goal is to preserve it and hopefully hold it for a longer period so that you can let that money sit and accumulate, right? So when you take an average out of all this, you will be either coming closer to that 8.5 number or exceeding it. In terms of the stock market, that's pretty self-explanatory. You see these numbers right here. They're all above 8.5. And same thing with real estate. With real estate, you're having above the 8.5 mark. You have 2019 with 8.6, 11.6 for 2020, 18.8 for 2021, and a projection of 11%. From the get-go, it might seem that the stock market, it's a better deal. But remember, with real estate, you get depreciation as well. You get cash flow, and you also get to enjoy appreciation, which is something that it might not be necessarily the same with the stock market. And because we are a financial educational channel, particularly focused on real estate, it wouldn't be fair to just simply talk about real estate and not invite you to participate in our free webinar. Because I know there's a lot of you out there who are looking to invest in real estate or buy in real estate, but you're not necessarily sure if you're doing the right thing, or that maybe you have some idea, but you wanted to corroborate that what you know is in fact accurate. For those who are looking to invest in real estate and want to learn how to properly do it, I want to invite you to join our free webinar online that you can just watch at your earliest convenience, and it's free of charge. All you have to do is to sign up to this link right here that you see on the screen, or just simply, sign up using the link that we are providing to you down in the description box below. So make sure you sign up and take advantage of this amazing opportunity. It is free with tons and tons of golden nuggets, and I will be seeing you at the webinar. Take care. Bye-bye.